This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
President Joe Biden's administration on Friday finalized a range of reforms designed to boost returns and address environmental harms from oil and gas drilling on public lands. The new rules follow years of criticism from green and taxpayer groups that federal oil and gas development was not benefiting the public. Many of the changes formalize provisions in Biden's landmark climate change law, the 2022 Inflation Reduction Act. Under the new policy, oil and gas companies will pay higher bonding rates to cover the cost of plugging abandoned oil and gas wells, as well as increased lease rents, minimum auction bids, and royalty rates for the fuels they extract. The rules also limit drilling in sensitive wildlife and cultural areas.
The International Energy Agency, IEA, trimmed its forecast for 2024 oil demand growth on Friday, citing lower than expected consumption in OECD countries and a slump in factory activity. The Paris-based energy watchdog lowered its growth outlook for this year by 130,000 barrels per day, BPD, to 1.2 million barrels of oil per day, adding that the release of pent-up demand by top oil importer China after easing COVID-19 curbs had run its course. Delivery data for many countries came in on the soft side, as unusually warm late winter weather curtailed OECD heating fuel use by more than normal, the IEA said in its monthly oil report.
Moving on to the top news in the energy sector.
Russian oil and products have become trapped at sea on 4 tankers after the United States hit the vessels with fresh Iran-related sanctions, LSEG data showed on Friday. The development shows how Moscow and Tehran have boosted cooperation in the face of rising Western sanctions and how the West is trying to untangle a complex web of firms to reduce the loopholes and revenue to both countries. On April 4, the United States imposed new Iran-related sanctions against a shipping firm, Ocean Link Maritime DMCC, and its vessels, citing its role in shipping commodities on behalf of the Iranian military.
China's crude oil imports in March fell from high levels a year earlier but remained strong amid a surge in Russian shipments, official data showed on Friday. Crude imports in March totaled 49.05 million metric tons, or about 11.55 million barrels per day, data from the General Administration of Customs showed. That represented a 6.23% decrease from the relatively high 12.3 million barrels of oil per day imported in March 2023, when fuel demand surged in the wake of China's exit from harsh COVID-19 restrictions. Next, we have the top news in metal markets. Copper's bull run should continue for at least the next 3 years, fueled by global supply challenges and hot demand for the metal-to-power energy transition and artificial intelligence technologies, industry analysts say. The outlook is an optimistic harbinger for Freeport-McMoRan, BHP and other producers as decarbonization and technological shifts fuel copper's latest demand wave after China's rise powered a similar one 2 decades ago. But with question marks hanging over a number of key projects, some estimate production will struggle to meet that demand.
Washington and London on Friday prohibited metal trading exchanges from accepting new aluminum, copper and nickel produced by Russia and barred the import of the metals into the US and Britain. The action is aimed at disrupting Russian export revenue amid Moscow's ongoing invasion of Ukraine, which has killed or wounded tens of thousands and reduced cities to rubble. Russia is a major producer of aluminum, copper and nickel. Russian metals producers Rusal and Nornickel did not immediately reply to a Reuters request for comment, nor did the Russian embassy in Washington.
We will now look at the top news in the agricultural sector.
China's soybean imports in March tumbled to their lowest for the month in 4 years, data showed on Friday, as high prices and poor hog margins discouraged crushing for feed consumption. Total imports for the month came to 5.54 million metric tons, down nearly 20% from the same period last year, according to the General Administration of Customs. Soybean arrivals into the world's top soybean buyer in January to March amounted to 18.58 million tons, shrinking 10.8% from 20.83 million tons in the same quarter last year, the data also showed. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.